Hi, this is Mark Austin, and today I would like to discuss with you my top 10 trading tips. The first one is preparation. Before I start the trading day, I draw up a trading plan, and then it's really just a case of following 100% discipline and trying to execute my trades flawlessly. I would say one of the number one mistake a novice trader can do is to win on the back of a losing trade. The reason being is that if they do it once, they're more inclined to then enter the trading arena a second time and hold on to a loss in the hope that it will come back to a winner. And this can result in all sorts of problems. Most likely it's going to result in a large dent in your account through running a loss, and this will then in turn lead on to psychological problems such as fear and anxiety. So avoid this at your peril. You can control yourself, but you can't control the market. Tip number 2 is learn to trade the closing gap. It is the bread and butter of many professional traders, and it's certainly a very reliable and low risk strategy which you can deploy most days on the FTSE. Tip number 3, this would be learn that your market has its own personality. Certainly in trading there's more to it than just learning about bar charts, chart patterns and indicators such as moving averages. There's a lot more information which you need to tap into in order to get a good edge on the edge in the markets. Certainly for the FTSE, that it has many personality traits. One example would be that Mondays tend to be bear days, and on a Tuesday you tend to reverse Monday's gains, and they also have a bullish tendency. Tip number 4 is don't focus on your profit and loss account, so your P&L account. When you're trading, you really want to be focusing on your charts. If you've done your preparation, you should know when to exit your trade or when to enter it, so there's no real need to be focusing on how much you've made or how much you've lost at a given point in time. If you do that, the only thing that's going to happen is you're going to open the floodgates to emotional issues. Tip number 5 is quality and not quantity. As a day trader, I do trade most days, but certainly there is a misconception that you need to trade every day. If I don't have a clear setup or an easy setup, then I will not be trading for the day. If you're patient, there are at least 2 to 3 very easy trades which you can tap into during the week for the FTSE, and patience really is a virtue in trading. Tip number 6 is don't be a bear on the first of the month. The reason being is that many institutional funds and pension funds will commit large monies on these days. So if your analysis is bearish on these days, I would perhaps start to look into a low risk breakout strategy such as the 5-minute bar to confirm any trade setups that you have. Tip number 7 is perseverance. Fortunes do not come to those who give up. If I have a very low risk trade to say at the open, which I'm trying to lock into, I have a very tight stop. If I'm clipped out the first time, I might have another go. Many professional traders can try up to 4 times to get into a low risk trade with a high reward. Certainly taking small losses is not a problem in trading. In fact it strengthens the mind. It's avoiding the large losses that you want to steer clear of. Tip number 8 is keep things simple. I have various systems and strategies which I deploy on the FTSE 100, and none of them are over complicated. In fact, through my experience, I would say that the more complicated a system is, the less likely you are to succeed in the markets. The reason being is that once you learn your systems and strategies inside out, you will then learn to apply some discretion. So you'll adapt to the market conditions, and you'll learn when is a good day to avoid your system or your strategy, and this will help lower your drawdown periods. Tip number 9 is learn that you cannot gain an edge on the news. Just because a piece of news is positive or just because a piece of news is negative, it is sentiment that drives markets. So the news might be perceived as positive by one person, but it might be perceived as negative by the other person. And this means that it's very, very difficult to call the market just before a piece of news. So what I usually do is if I'm in a position, I'll probably try and lock in some profit or put a guaranteed stop in place, or I'll just stand aside and wait for the news to complete, and then I'll assess when to enter the market after this. And lastly, tip number 10. Large egos have no place in the trading arena. What do I mean by this? Well, 80% of the time the market is sideways trading or it's consolidating, and you can get into some very easy low risk moves when you see this type of market action. Too many traders obsess with trying to catch the big moves and try and pick the tops and the bottoms of the market, when in practice this is very, very hard to do. So keep your egos to one side and really focus on deploying low risk strategies which you can use 80% of the time in the marketplace. So hopefully you found these tips useful and you can refer back to them. Thanks for watching.